Gold prices had a record run this year, in part because of anxieties around the US presidential election and potentially a contested outcome. Now that Trump won a clear victory and we're past that, is gold still a good investment? Gold has had an unusual year. Unusual because gold is something investors tend to turn to in a recession and in political instability. But this time, gold rallied along with the stock market and a growing economy. So what happened? Some experts think it has to do with concerns about US policies and geopolitical tensions, including in Russia and China. If we look at this chart, we can see that global central banks have been lowering their reserves in US dollars from more than 70% in the 2000s to less than 60% in 2024. But if we look at gold, we can see that central banks have been increasing their reserves. One country in particular that has been beefing up its supply of gold is China. And if we look at this chart, we can see that that started to happen in 2019 when Trump started to apply tariffs on Chinese goods and services. So it's no wonder that with a tight presidential race, gold prices spiked 35% from a year ago, as investors and global central banks tried to hedge the risks of policies that could be put in place. Both Republicans and Democrats have shown little interest in tackling the debt issue facing the United States. Former President Donald Trump campaigned and won on policies that risk pushing the deficit considerably higher. After his win, gold prices immediately fell as investors piled into stocks, Bitcoin, and other risky assets that could benefit from tax cuts and deregulation. So is gold still a good investment? Over the next several months, the dust will settle and we will know more about which policies are put in place at home and abroad. Goldman Sachs analysts recently said that they expect demand for gold to remain structurally higher based on fears of international sanctions. Also, the Federal Reserve kicked off its rate-cutting cycle in September, and lower rates tend to benefit gold. And with investors getting in on the action, gold ETFs should rise over the next couple of months, according to Goldman analysts. They expect gold prices to rise to $3,000 an ounce by the end of 2025, up from closer to $2,700 after the election.